Welcome to the Consulting Leaders Podcast, where we talk about the business of consulting. Whether you're looking to grow your practice or learn from the stories of leaders in consulting, you're in the right place. I'm your host, Guillaume Jouvencel, ex-PwC and co-founder of GHA Marketing. Join me as I interview the best consultants in their niche. Let's get on with the show. Welcome to Consulting Leaders. Ladies and gentlemen, this is a returning, very good and very appreciated guest, but from another podcast. Kurt, let's just jump straight into it. What got you into consulting?
Well, it's quite a complicated question, really. So, look, I've always done what's interested me, right? I didn't follow a well-trodden, narrow and traditional sort of career path. I figured that if I was going to be working for 10 hours a day, I should be doing something which interests me. And as a result, my CV is very eclectic. I guess it sort of includes buy and sell side financial markets, fintech startups through to very large mature corporates. And because of that, I think it's just provided me with a great opportunity to do consulting. I think if you're very narrow and very specialised, you're also very limited in that space. It's interesting. I was drawn to financial markets because it was exciting and spontaneous, and the intellectual challenge of taking positions against the market was something that I was really interested in. And I started as a buy side investment strategist with a macro fund. Then I moved to the sell side as an FX option price maker and book runner with a commercial bank. When I left derivative trading, I did it to commercialize software that I'd created for pricing and risk managing options. I guess what you'd call fintech now. And that's when I was really bitten by the entrepreneur bug, right? And I found that when I moved into corporate treasury, I brought that entrepreneurial mindset to what was now large and mature corporates. And that was really about, how do I improve the financial economic condition of this company? And that was a real asset for the corporates I worked for, but it was especially important for moving into consulting. And why did I go into consulting? Because I wanted more control. I wanted to run my own business, get all the rewards and take the risks I wanted to take without requiring approval from a bureaucracy. I wanted to do what interested me, not what someone else told me to do. And I wanted to be master of my own destiny. As you know, consulting's not easy. It's a massive step change, really. I don't have a salary. I get paid for the work I win and complete. This is not for everyone. In fact, it's not for most people. Most people don't want to take that risk. For me, it's liberating not to be a wage slave. And so far, it's certainly proved to be much more lucrative. But when I go on holidays, my office comes with me. Client work, client meetings, etc., continue regardless of where I am and which time zone I'm in. And I think I would provide some advice to consultants out there: get some really good noise cancelling headphones. That basically means I can work anywhere, including last year on Italian trains. So good piece of kit to get.
So, derivative trader, being on the other side of the table as well. I understand that you want to be your own boss, basically, decide of your own hours. You could have lived a very comfortable life, and I suspect very well paid life as well, right? It's not like, derivative traders don't get paid well. Is there something different that you feel you're bringing as a consultant that you couldn't bring as an employee of a company?
Look, I think, if I look at bank trading, for example, look, I loved it. It was fantastic. It's exciting, and it was a real challenge.
Yeah.
But all it was make money, make money, make money. And that was how you essentially were valued by the bank. How much money did you make for them?
Yeah.
And it almost became your own yardstick for how good am I is how much money I make. What I find in the corporate world is it's more stimulating because it's not now me doing 200 trades in a day, just trying to make money out of movements of FX or interest rates or commodities or whatever else it might be. Going into corporates, it was how do I make sure that this corporate does well? It's got employees it has to pay. It's got suppliers it has to pay. It wants to thrive. It wants to grow. It wants to succeed. And companies that stand still don't survive. And so it became a much bigger problem to solve. And a much more interesting problem to solve. So when I worked for the bank, did I help corporates? Yes, I did. I took risk that they didn't want to take anymore, and that had a value to them. That's why they traded with me. But I think it's moving from a very short horizon, very singular focus to now going to a much longer horizon, and that's what really made it interesting for me. And if I translate that now into consulting, then it just means I'm not restricted to one business anymore. Now I have a portfolio of clients. I work in a non-exclusive portfolio mode. So at any one moment, I've got 2, 3, or 4 clients that I'm working with at the time. I really enjoy moving from one business to another through a day. I'd spend a morning doing work for one. I'll spend an afternoon doing work for another. And it's that intellectual challenge of how does this business work? How does it operate? How can I bring what I have to making this company perform better in a financial economic sense? And that for me is it's really interesting, and I like it very much. I don't see anything beyond that for me other than retirement at this point. There's not another point where I go, okay, I wish I was. This is a stepping stone to something else. This is where I want to be, and I feel like everything else that I have done in this very eclectic background that I have has been to position me to be a consultant. That's why it was done. That's the way I look at it.
So what you said earlier about, I realized I was going to work 10 hours a day, so I might as well just do something that I like and I enjoy doing. This makes me think of like how we see work in France, or where I'm coming from, where it's very much, work is going to be its thing on its own, but then there is this whole life outside of work. But when you think about it, you're going to be at work 8 hours a day, so at least half of your awake life. So you might as well just do something that you feel a certain fulfillment out of. And hell, consulting is stimulating, that is for sure, and that's challenging, and that's not for everyone. I think you're very right on this one, but it can be so fulfilling and so satisfying when it all clicks and you deliver and you get new engagements and you make other people work and clients are happy and you're saving big money, you're making the company big money. That's what's making consultants wake up in the morning, I guess. That also answers what you offer, right? What problem you solve, Kurt. Can you tell us a bit more about who you're solving this problem for? Who's the decision maker that you're trying to get in front of, right? And is it different from the person who you're working with? How does this all work?
Okay, so let me start off then looking at the problem that I basically looking to solve. And let me put it in a bit of context. So if we talk about sustainability, right? Sustainability has been top of corporate agendas for a decade.
Yeah.
But when corporates speak about sustainability, they mean ESG, environmental, social, and governance.
Yeah.
However, companies need to be economically sustainable. And what that means in practice is that companies need to be able to fund their corporate strategic ambition, and they need to build resilience to business cycle downturns and adverse economic conditions. If you can't do those things, firstly, you don't thrive, and secondly, you won't survive. And what I do is I make companies economically sustainable by aligning governance, strategy and risk and KPIs. And I make sure that companies source, structure and allocate capital in a way which increases enterprise value. And this is crucial because this is how you get to deploy capital and then replenish and grow capital through a return, allowing capital to be redeployed again in future. And in other words, the company is economically self-sustaining. It can do more in future than it is doing today. And if I contrast that with companies which don't increase value, companies which don't increase value do not grow and sometimes do not even replenish deployed capital because of inadequate returns. In other words, that scarce capital is consumed, and capital which is consumed can never be redeployed. It is lost forever. The company will do less in future than it is doing today, and I call that death by 1,000 cuts. Okay, and large mature companies, they might be able to last a while before they actually do have to close the doors, but that's just a losing model. I also provide advice to companies on whether they should pursue a return strategy or a growth strategy. And a lot of people think that growth solves all your problems. In fact, growth exacerbates most problems, and strongly growing companies can destroy value at a very fast rate if they're not disciplined in their capital management. The second part of your question was, who are the clients? Who am I talking to? Who makes the decisions?
Yeah.
For most of my engagements, the chief financial officer is the buyer. But it's interesting because I've found that CFOs often have more ambition for the function that reports to them than the leader of the function itself. So, for example, CFOs often have more ambition for Treasury than the treasurer. And this isn't because the treasurer is bad. It's because the treasurer is so busy with day-to-day that they can't find the time to be more strategic. And the difference between a CFO and a treasurer is that CFOs will act and they'll get a consultant to actually solve the problem. Treasurers are more likely to struggle on than propose a solution, which is a little like trying to get out of a hole by digging deeper. I think most consultants would say their ideal clients have deep pockets and very large problems. But I think my ideal clients are good people and good professionals. They want a working life to be better than it is now. They're open to listen to what I think they need, which may or may not match what they think they want. For example, I had a client who said that they had a capacity problem that they wanted fixed. My work revealed that they had a capability problem. And capability is obviously very different to capacity, which means very different solutions. So again, I said I wanted to control, be master of my own destiny. I want to work with good people. I don't want to waste time with bad people. So that's also shapes which clients I work with.
I like that nuance. And I think from my experience with treasurers, there's going to be some who are crazy ambitious and they're going to do the things that helps them grow. But the vast majority is focusing on the day-to-day and on delivering and on actually extinguishing fires at a rate that doesn't sustain the amount of new fires burning, but that's all right. So in your case, Kurt, the CFO is going to be the one bringing the consultant in. He's going to be the one unlocking the funds, obviously, I imagine, like he's the one making the money decision. Is the treasurer the one that you work with, though? And therefore, do you need to get in the room with the treasurer as well before you decide of engagements? How does it all get together?
Yeah, it can vary a little. Sometimes it's direct contact with CFOs. I do have a very deep network in the Treasury community. So I would say, my area of expertise, if you like, is corporate treasury, corporate finance, financial markets, and board advisory. So that's the space that I like to operate in. I'd say on the treasury side, that has been more my deep network in the treasury community is what sort of what gets me the contact with the CFOs when solutions, when people want to use a consultant. So it's probably, in that sense, it's been indirect via the treasurer. For the corporate finance side, I think it's been more direct with CFOs. CFOs, they might have their corporate finance team might not be really delivering the value that they want. They think there's a need for it to be looked at and possibly a refresh, restructuring, hiring new talent, whatever else it might be. And that is generally more direct with CFOs. But most of my clients have probably fallen into a couple of categories. There's been smaller companies which have grown through acquisition, and they don't actually have a CFO. So they've got chief commercial officer, the one that's out there sort of generating all the business, and which is the commercial operations of the company. And it's grown and it's expanded almost from family type business now into a proper corporate world, and they don't have a CFO office. And I've been called in then to basically set up a CFO office to primarily to improve their EBIT profiles so that they can attract equity and debt capital. And most of these companies want to IPO. They're really keen to do an initial public offering. And what has happened has been really me setting them up so that they're in a position to do that, helping find a CFO that can basically take over from me, because I market myself as sort of intellectual capital, not a resource. So brain versus sweat, I guess, is where I'm trying to pitch. But the other advice that I've given them is don't IPO. And that's really been asking them, why do you want to IPO? And it's taken quite a long time to get a direct answer. And it's been, well, because then you're a real business. You've arrived when you're on the stock market. And I've said, well, okay, but you also need to employ somebody that just does listing rules, nothing else. Your exec and board salaries and bonus schemes are all public knowledge. Your competitors get to see everything that you're doing. And by the way, that capital is a lot more expensive. I can get you, bank loans that are a lot cheaper and more flexible. Help you negotiate the T's and C's so that you've got a lot of flexibility. I can get you convertible notes. I can do these other things. And as it stands at the moment, there's a couple of companies that I'm sort of thinking of. They still haven't IPO'd. And so it's that's one sort of side of it. And then the other one is very large, mature companies who are falling behind a fast changing landscape and basically need to reconfigure their operating models, restructure teams, hire new talent, undertake digital transformation, the whole thing, because they've fallen behind with all their legacy approaches. So I think the good thing is that return on investment for business cases in Treasury and corporate finance is usually really high. And that's simply because the scale of the responsibility, if you look at Treasury funding and hedging programs, which are very large, so in those sort of functions, if you're adding value, you're adding very large amounts of value. And so you can make it quite a compelling argument.
How do you get into the, so before getting into the room with them, how do you, so I think we have a good understanding of what you're providing as a service and as a support, and that's intellectual capital versus the sweat capital. How do you market your consulting practice, Marengo Capital, to the CFOs and the treasurers of the companies that you're targeting? Like, how do you make people go from, I have no idea who Kurt Smith is, to, oh yeah, sure, I know Kurt, he helps companies like ours with XYZ. How do you brand yourself?
Yeah, so as I've said, I specialise in Treasury and corporate finance, and both are technical fields, and both are over-serviced and highly competitive markets. As a result, I need to be able to differentiate myself from the pack. My key points of differentiation are the value I create is a multiple of the fees I take out. So if you use me, net, it's going to be a client benefit. So that's the first one. The other is I say, look, I get it because I've done it. I'm not a career consultant. So, if I've been working for, I always say over 25 years, right? Because I don't want to think exactly how long I've been working.
That's plenty, credible enough.
So it's perennially over 25 years. But 90% of that has been as a corporate insider. And it's only been the last part of it that has been as a consultant. And so what that means is I have done it. So I haven't made a career out of just advising. I've done what people are struggling with. And so I know not just where the problems are and where to look, I also sort of know, well, how do you get this through a corporation? I know, well, what does a business case actually look like to get something like this done? Whose approval do you need? Who do you need to socialise it with beforehand? And so that sort of stuff. And the other thing is the person who wins the business does the work. So, and that's a big sort of key differentiator for me with the large, the global consulting firms who, a partner usually wins the work and the juniors end up doing it. Whereas what I do is I'm the one who goes in and says, well, here's the experience and expertise I have, and then I'm going to actually be doing it as well. And so that sort of worked well. How do clients find me? Mainly through referral from other clients, which is fantastic because that's very strong leads, right? It's independent, it's voluntary, it's targeted at the right level. I also get clients by speaking at thought leadership events, such as being on panels at conferences, appearing on podcasts, presenting on webinars, etc. And I'm now creating videos which are being distributed on my website and through a couple of other distributors, which will be on a range of topics from Treasury, corporate finance, financial markets, and also leadership. Thought leadership, it's a bit of a chicken and egg situation. You want to get paid business, but you are offering insights derived from over 25 years of intellectual property, and you're doing it for free. So that feels a bit counterintuitive, but I think what it's done is that I think people see me as a thought leader in these subjects, and as someone who pushes the envelope rather than just following others, and that results in my name coming up when they are looking for work to be done. And look, I operated for years without a website because I just thought a website's never going to get me a lead. So why am I going to do it? And then I was talking to somebody and they said, well, often people want to see they want to get a look at a website as part of doing their due diligence, right? They want to just sort of say, what do you value? What do you do? How do you do it? And then I had all this material that was either written in video, podcast, whatever else it was, that I thought, well, look, I can put that on there as well. People get to have a really good sort of look at me before we even necessarily have to go into in-depth conversations. And if they like it, great, we can continue. If they don't, that's fine as well. We can go our different ways. But I think one thing as well is that I tend to perform well in C-suite and board meetings. So I'm sort of, I think I know how to communicate with them well, what they're interested in hearing. And so that reflects well on the person who is putting me forward. So if it's the CFO, for example, and they want their colleagues to actually to get a look at me because it's other parties that can sort of see whether it's a good decision or not, but also because I'm probably going to touch their areas of the business as well. And generally that goes quite well. So, and I think that's because, I learned very quickly that CFOs and boards really want to hear about the level and slope of yield curves, forward points or volatility skews, right? They want to know how you're going to improve the company. What are you actually going to do to make this a better business? And I guess I've had a lot of experience of that because at heart, I'm an entrepreneur and I understand the financial economics of businesses.
Yeah. How do you bring that one home, Kurt? So to kind of summarize and break down what you've explained, consultants get business at first mainly from referrals. For me, that's not like a bug, it's a feature. If you do a good work, people will recommend you. That's how it works, and that's how it should work, right? Consultants should first seek referrals because that means you're doing such a good job that people want other people to benefit from it, and they are willing to put their reputation at stake by recommending somebody. And when it comes to B2B consultants, especially in your space, where we talk about big projects, big structures, big fees, that means quite a lot. Then there is, okay, how do I develop? Because you're going to get that steady growth from referrals, but you're not going to be able to scale a practice from referrals. So this is where comes in an acquisition channel. I like that you have speaking at conferences and in panels. That makes a lot of sense. Thought leadership, SME, being perceived as the authority. This is key. Starting to having a website, some materials online, that means a lot. So that's how you make people aware of you and that, hey, I'm Kurt, I'm helping people like you with this and XYZ. How do you bring it home? How do you go from brand awareness, people know you, you have a first chat, to SOW, lettering of engagement, we rock and roll? How do you close that gap?
So large, mature companies have very cumbersome bureaucracies.
Yes.
And that means they've also got long lead times and long cycles as a result. And there are two ways that I've had success, I guess, in this environment. And firstly, I can't change the company and speed up the process, so I don't try. Instead, I perform that non-exclusive portfolio work, and that's the way I describe it, non-exclusive portfolio work. So clients will realise that I'm not working exclusively for them for a month or 2 months or 3 months or whatever they want. I let them know that I'm working on other engagements at the same time. And so what that means is I'm not beholden to one engagement. If one gets, if it takes longer than expected to get over the line, it's okay because I'm working on others. So that sort of diffuses that concern when, your time frame is much quicker and much more nimble, and this slow moving company that takes forever, it takes away that frustration. The other thing, I don't do meetings just to catch up. So I think while it's nice to have coffees and a casual chat, for most people, it just puts them under more pressure to complete work in what is less time, because I've just taken an hour of it having a coffee with them. So what I do instead is I make meetings meaningful by bringing market intelligence, new ideas, what can be done and how, such that follow-up meetings are usually requested by the client, not me. And so, they're interested in that bit of market intelligence that they're not getting. So if you take treasurers, for example, they are massively overserviced by banks, and there's banks giving them truckloads of intelligence on the shape of yield curves, the level of yield curves, where FX is, which markets in DCM are looking good, whether it's MTN, whether it's USPP, and all that sort of stuff. But they're not able to give them intelligence on how to run their treasury as a business. So they don't know what corporate structures are like for treasury. The organisational hierarchies, they don't know what sort of strategies that treasury should run. They don't know how to link sourcing, structuring, and allocating capital. And that sort of stuff is where I can provide some of that information, obviously generically, anonymously, so that I don't give away what people are doing. But people are very interested in, what are you seeing other treasury businesses, or what are you seeing other corporate finance functions actually doing? How are they structured? What are they doing? What's the best one doing? What's the worst one doing? Yeah. What are some of the common problems that you're seeing? Yeah. And because of that, the meetings, which invariably are over coffee or just a short meeting in office, I keep them lean and mean and fast and punchy, but they're getting a taste of stuff which is interesting to them. Yeah. And because they're getting some value out of it, they're getting some interest. That's okay, because they're then interested in following up. And so either they're booking another meeting with me, or if I call them, they'll answer the phone. So that's sort of, I guess, partly on how I do that. I think as well, I'm pretty good verbally, so I can think quickly on my feet and articulate a succinct and compelling response. And this makes for a dynamic two-way conversation, not a one-way pitch or a presentation. And so prospective clients, I think, see me as someone who wants to help them, not a salesperson selling to them.
Yeah. So this is getting a bit outside of the business of consulting, but we have Frederick on the live chat on LinkedIn, who's a fintech and payment senior consultant. So first of all, little stroke, Kurt. Kurt's expertise in bridging financial theory with practical business impact is truly impressive. Aligning corporate strategy with financial structure is essential for driving sustainable enterprise value. And he asks, how do you see the role of AI evolving in treasury and risk management? What's your take on this?
Yeah, AI is interesting. Actually, I said that I've just done started doing some videos. The first video I did was on AI. And the reason for that is because I'm hearing it everywhere I go. Any conference I attend, any, lots of webinars, everything, it's AI everywhere. And the video that I did, it was trying to make a play a little bit. I said, AI, IQ, DD. right? So AI is artificial intelligence, IQ is obviously smarts, and DD is due diligence.
Yeah.
And for me, all those things go together. So I think,
Yeah.
is AI an opportunity? Then yes, it definitely is. I've used AI. So I've used it to do the videos that I do, the editing, for example, which I wouldn't be able to use the software without it. So if it's just productivity, I don't believe there's a lot of value in it at the moment, if that's all it is. And that's where most people are focused. Can you get benefits? Sure you can. But you'd get as many benefits out of doing digital transformation, automating some steps, integrating systems with your ERP. You'd get as much productivity improvements out of that as you would out of AI.
Yeah.
Where I think you need to be able to scale AI is in decision making. So data-driven decision making, improving that. And then the other is by using it to increase value. And when I've said IQ and due diligence, that's because it's a little scary at the moment, because I'm seeing people who are wanting to take up AI without having that overlay.
Yeah.
And AI is like a black box. So it's using algorithms, and these algorithms are capturing what's happened in the past to help predict what happens in the future. And one of the first things you learn in financial markets is the past has nothing to do with the future. So you have to be very careful. And treasury management systems, for example, there's a number of them now which are using AI in cash flow forecasting. Now, I think that's a good thing. I've also said to them, because they've come to me and said, well, what do you think about our AI in forecasting? And I've said to them, can I toggle it off? Can I go into the settings and toggle it off and see what the answer looks like without AI?
Yeah.
And they've said no. And I said, well, that would be a really valuable feature. Here's the forecast with AI. Here's the forecast without AI. Then you can look at the difference and go, okay, where's the difference coming from? And it could be coming because the AI has churned through a lot more data and has found something which is interesting, which you can use for decision making. Or there's its processes attaching too much value to particular data, and that's why it's different, and you can discount it. But that helps you do decision making. If it's just a black box and you can't interrogate it at all, can't interrogate the answers, then you've got a problem. Just think of it like a spreadsheet.
Yeah.
Somebody comes to you and says the answer is in cell F6 and it's 42. You don't just go, okay, thanks, I'm now going to issue a bond, right? What you do is you go, okay, what data did you use? Is it the latest data set that the corporate is adopting? Is that the data set that you've used? Has it been peer reviewed, the spreadsheet? How and in actually question the developer a little bit. What assumptions have you used? So I think I would say I think there's a lot of opportunity. I think it has to move from productivity into decision making and value for it to be truly scalable. But at the moment, my recommendation would be to say, don't forget the IQ and due diligence overlay. And for all those people that think, my job might be redundant because of AI, it's the IQ and due diligence that stops it from being redundant. It's
Amen.
You still need the smarts. You still need to question what you're getting in order to make sure that it's right, especially if you've got hundreds of millions of dollars riding on it.
Yeah, that makes a lot of sense. And Frederick, so I've linked the video of Kurt that talks about AI on his website. You can check it in the comments. Kurt, maybe to wrap this up, a question I like to ask all my guests on consulting leaders. Clearly, with 25 plus years of experience. I mean, you've nailed your niche, you've nailed the avatar, you've nailed the offer. My question to you is, where do you feel stuck right now? The reason I'm asking this is we might have some people listening to us right now, or when the episode will go live on the podcast platforms, who are consultants with lots of experience and who might feel stuck at the same point as you. And it's always interesting to hear from your peers how they think about the problems that you're facing as well. That's the whole business model of conferences, actually. So where would you say you feel stuck right now that could, unlock the next level of growth for Marengo Capital?
Yes, I think if we look at how clients want to use me, part of that operating model is that they want me to do the work. So they don't want me delegating it to juniors or subcontracting out. And so what that means is that's not a high volume, low margin model because you can't scale time. Okay. Yeah. So I look to leverage my expertise and experience to design bespoke, innovative solutions which generate value. And because they're bespoke services, they come at bespoke prices. However, those bespoke prices are a small fraction of the value generated for the client, and they're also a fraction of the price of global consulting firms with partner bureaucracies and CBD office space to support, especially when those consulting firms are often selling house solutions rather than designing bespoke solutions. So I think it's really, I learned a lot from, it's one of these weird things that happens in life, right? So I had a consultant reach out to me from Melbourne. And for those people who don't know much about Australian geography, right? I'm from Perth. I'm in the Wild West, the West Coast. Melbourne is on the East Coast. It's about a 4-hour flight. And I had a consultant just reach out to me, "G'day, how you going?" And we just sort of emailed and we spoke and things like that. And it was just, just talking through what we do, how we do it. And then I had a client in Melbourne, so I went over and I thought, look, I'm going to have a coffee with this guy and we'll have a chat. And when it came down to it, I was really busy on that day. I had lots of other meetings. I had to run all around Melbourne. And it was sort of a bit inconvenient for me, but I thought, well, I'm going to go because I hate at the last minute cancelling. It's a terrible thing to do to people, right? So anyway, I sort of ran there, sat down, had a coffee, and it was one of the most informative meetings I've had in a long time. And it was because he was absolutely laser focused on his value proposition, where he likes to play, what he wants to do, what he doesn't want to do. He was absolutely crystal clear on that, on where he sat, where he pitched, where he was an expert, and things he didn't want to do. And I just found it super valuable. In fact, I was catching a plane that night, and on the way back, I just wrote a note for myself, in my iPad, and it was ruthless. And it was just, I have to be ruthless here. What is my value proposition? Where am I going to play? I said to you, it's a overserviced market, lots of competition, and be really clear about what I do want to do and what I don't want to do. And that has served me very well. But that intelligence came from a meeting I never expected to have with somebody who I'd never met before. It's funny how things like that can turn out. I think for me, one of the big sort of challenges will be the economy. I think the economy in Australia, certainly in Western Australia where I'm from, that's been growing very strongly. But there are headwinds emerging, and a knee-jerk response to that can be cutting consulting budgets. But but I tend to think that's going to affect the global consulting firms more than me. I'll have to wait and see on that, but that's part of the reason why I think they're starting to cut some of their headcount now. And I think there's some questions around that model of operation, which sort of I think is helping me position where I want to be. One of the great hopes for me is I'm based in Perth. Most of my clients are in Sydney. I have some clients in Melbourne as well. I am very, very close to signing up an international client, which is great, and I'm hoping that's the first of many. So that's the next point that I want to make, is where I move from national to international.
Kurt Smith, ladies and gentlemen. Kurt, if people want to find out more about you, Marengo Capital, where should they go?
So it's www.marengocapital.com.au, and the Marengo comes from, if you can see in the background, there's Napoleon on his horse. His horse's name was Marengo. So if you're having trouble spelling that, then yeah, that's the place to be. It lays out the services I provide, products I provide, videos. I'm going to be adding videos monthly from now on. So yeah, please click away and reach out. It'd be great to hear from people.
Sounds like a website is useful after all. We'll put all the links in the description. Kurt, thank you so much for coming on Consulting Leaders.
Thank you, and thank you very much for inviting me. I appreciate it. Good to see you again.
I appreciate you, man. Thanks for joining us on this episode of the Consulting Leaders podcast. We hope you learned valuable lessons on how to grow your practice and take your business to the next level. Make sure to subscribe and leave us a review wherever you're listening to this show so you never miss an episode. To apply and be a guest on the show, click the link in the description. See you next time.